All right, folks, we're going to be looking at the euro dollar versus the dollar index. Euro dollar pair is on the left-hand side. Right-hand side, we have the dollar index. So I'm mapping out a market maker sell model, real time here with the euro, sticking with the bias that the dollar index should go higher. Now, I got questions from students that were asking, how do we practice, even though we're in low volatility, low probability conditions, and we're in these smaller time frames? I mentioned that we have to be operating and using the framework on a 5-minute and or 1-minute chart. As you can see here, the buy side imbalance, sell side inefficiency on the euro on the left-hand side, I have the discount low marked for the euro, and I have the premium high for the sell side imbalance, buy side inefficiency on the right-hand side for the dollar index. What we've already seen for euro is the smart money reversal and the dollar index smart money reversal on the low, and it's 8:15 a.m. on Tuesday, December 14th. I'm going to show you. I can get this thing here to open up a little bit more. All right, go to my paper trading account because we have to be compliant, not licensed to give real trade advice. We're all demo ballers here. All right, so you can see it's the same account. I'm not restarting new accounts. Okay, everything's here. And again, I'm using this as a teaching tool for those individuals that want to try to go after like a funded account. And how would you go about doing that? Because it's a demo account there too when you're qualifying. But everything's as it was the last time you saw it. All right, so I'm going to enter a trade, but keeping with the idea that we want to be just observing while we're in these small ranges, I will enter a trade just to prove that it's the same account, it's the same chart. I'm not looking at 15 other different charts and trying to pick something that works out because there's trolls that say that's what I'm doing. And maybe some of you in here have even considered that as maybe that's what's going on. I'm only cherry picking. Okay, so I'm a little disappointed that some of you might think that, but okay. I have an answer for that too. So what we're looking at is the likelihood of a rally on the euro into a bearish order block, which I'll note when it's salient, but it's around that 113.20 level, just below 113.20. And then we have a small little imbalance on the dollar index with a bullish order block as well. So for the purposes of the framework, I'm looking for initial signs that we're going to get basically the first stage of distribution on euro dollar and first stage of accumulation on the dollar index. So basically, I'm looking for a short-term high to form in euro. That would be the beginning point where you would screen capture and kind of like, this is what you do when you're watching it. And you're basically tape reading. Now, again, I'm not advocating trading or demoing in this climate, but I'm going to do it just to prove that there's no other chart that I was worrying about. Because if I have this mindset and I have this framework here and not 17 different other scenarios that I could use after the fact, it won't be able to be used because I have a trade idea I'm going to enter right when it's time. Okay, and I'll outline it. You'll see it. I'll use all the tools in TradingView. There's no replay button because you can't use replay with an entry. But the idea is just to put the trade on, and I'm going to close the trade and let it pan out. Okay, and then I'll come back after later today if everything goes well. If I can get down into that 112.65 level, which we're see on the euro on the left-hand side, there's sell side liquidity resting below that. So we got about 4 minutes or so for the high impact news PPI number for the dollar index. So we'll be watching that. Almost made it down to the discount low on euro dollar on the left hand side. Now, I'm going to show you how to use these ranges if the market provides the framework for it. But I want to see impact 8:30 a.m. and showing you the time here. So everything is as you would expect. So we use imbalances with the idea that they are key support and resistance levels, not like retail. Let me get this thing here. The levels are important. We're not looking at ranges and trying to figure out like a supply and demand zone. Okay, there's a premium high, a consequent encroachment midpoint, and then a discount level. All of them, all three, and it's only three. They're not random. Okay, they're salient. So what I'm watching here is the euro. It's rallying, and I'm using that opening price on that down close candle, and I'm treating this as a Judas swing, or think of it as a Judas swing on euro if we can continuously rally a little bit more. Now, I don't suspect that we're going to take out that 113.25 high. In fact, I want to see it keep that. And if you look at the last two up close candles on euro, that's my bearish order block, and it's also a bearish breaker. And I think that if we run up into that, that will be the first stage of distribution for euro to go lower for the market maker sell model. And right in here, you can see that small little fair value gap in the bullish order block here. If it trades down into that, that should be at the same time the euro should trade up into its bearish order block. If that happens, that's a bullish optimal trade entry for dollar and a bearish optimal trade entry for euro. And that would be first stage distribution for market maker sell model for euro. So we're looking at, again, the idea that this run up since 3 o'clock in the morning London time on euro was more or less just a puffing up, okay, building in a premium so that way interbank traders can sell short at the 8:30 news driver that releases on the PPI number. Now, PPI's hit the mark. It's been trading now for 5 minutes. It's lethargic. It's not really doing anything. And notice what it's doing. It's kind of like giving you that broken wing tactic. Like here's our bearish order block right there. At the same time, dollar hits that right there. That's a buy for dollar and a short for euro right there. That's what it looks like. Optimal trade entry. And that right there trips the retail traders into thinking, okay, dollar index is going lower. And we have the euro creating a short-term high. And that looks like a bull flag for euro dollar for retail traders. But I'm teaching you to look for the market to go lower on euro because we're fundamentally and technically believing that the dollar index is still likely to go higher for that premium high on its dealing range, on its hourly chart, which we've been framing. I've been framing now for over a week or so. So you would have taken a screen capture at that moment while you're tape reading, and that's what it would look like as the trade forms for first stage distribution. Now, that is a little scary. If you don't know what you're looking for a market maker sell model, it's a little, well, you'll second guess yourself a lot, let's put it that way. And when you see multiple examples of it when you're watching the tape, and you can do this exercise also. You don't need to do it. It's better if you watch it live or record your data while you're at work or at school or whatever. Then go back and watch it live, playback. Okay, and you'll get a better feel for what price is doing. It'll train you to see the things form as they happen. And I framed out the consequent encroachment level and the SIBI on the dollar index. That's why it's showing a little bit of a weakness there. Next pass above that, that should spell continuation of the upside for dollar. And then I'm going to be watching for that premium high on the SIBI on dollar to act as what you would expect to see in classic support and resistance broken turn support, which isn't in textbooks or technical analysis. I'm teaching you how the algorithm is going to refer back to that level that's already on my chart. Okay, it's sitting right there. It's been there before I even started the recording, before the day even started. All right, so we have confirmation now on euro that the first stage of distribution is likely forming. And if anyone was just watching the YouTube channel content, they might think that is a bullish order block that it's trading down into for euro dollar. And I've seen a lot of folks on YouTube thinking like that. And again, that's assuming just because they watch a few videos, they know how to do it. And you're learning the intricate details as to why the algorithm does what it's doing. And again, I'm typing all this stuff out here so that way you can see it's really me thinking all this stuff. I'm really putting it into the framework here. So if you were watching this and you were anticipating the Judas swing in the New York session and you want to see first stage distribution, you are seeing exactly what you want to see in terms of the PD arrays confirming. So that right there is too deep of a decline down into what would otherwise be seen by traders outside the mentorship as a bullish order block, because every down close candle is not a bullish order block. So you have to have the understanding and the narrative, and I'm framing the fair value gap in here with the small little buy side balance outside efficiency. I'll map out the dealing range here, and you can see we are in a premium market. I'll map that out here. So all of this in here is a potential shorting condition. It's good because we're in a premium and dollar index is poking against its consequent encroachment. Okay, and I'll just label this. Get this Fibonacci off and put in a label just annotating premium. So when you're looking at price, this is what you're trying to see. Okay, this is not something I'm adding after the fact. I'm not doing this with lipstick to say, look, it's already happened, so now I can make it look good like everybody does on YouTube. If that's one of you guys in here that are learning and trying to, showcase your talents, I'm not trying to be mean to you, but I'm just trying to show you the difference. If you know what you're looking for and you're skilled, you'll see that. So what I'm going to do is I'm going to set up the idea of shorting. Now, for screen capturing purposes, you're not trying to trade, but you would set up the framework on your chart, have the orders, set up as you would enter, where your stop would be the whole thing, and then screen capture that and put that in your log. You're not actually executing now, because again, the climate right now is we're in a small little range that's been formed on the hourly chart. So that dealing range we have yet to break out. So while you're learning, you're trying to give yourself experience, but not try to demoralize yourself if you're doing it wrong, which is exactly what most of you will experience. Okay, and you would take a screen capture of that, and that way it would be in your journal. And here I'll show you a bearish order block. So right now you could be using that right there. That's a sell. You could go a little bit deeper into that uppermost bullish candle. That'd be a bearish order block. In other words, it can expand a little bit more higher on the euro dollar, and you would screen capture it. We'll see if we can get it actually. Okay, so we've already seen it trade too deep, too low for a bullish order block. So now we know that the institutional order flow is likely to drive euro lower, and institutional order flow should be bearish for euro dollar. Right there, that's nice. That's a nice screen capture right there for euro dollar. That's a bearish order block being traded back into. Now again, be mindful that that mean threshold on that last up close candle, on the most recent swing high that's forming right now, it can go about halfway point of that last up close candle, and it would still be fine. It's not taking anything out, but your stop would have to be around that 1320 level, maybe 1322. Okay, so it'd be technically around 10 pips or so. Okay, that would be a short right there. That's a screen capture right there. And your orders would be recorded, hypothetically, because you had the order window open, how you would go into the market selling short. Okay, now at this point, retail traders see a bull flag on euro, and they see all those little tails and wicks underneath the candles. You see that? They think that that is accumulation. They think that that's going to send the euro higher, Well, I'm training you to see this as it's in a premium market. It's overbought. It's been elevated to levels that are not likely to be sustained. We had economic data come out for the dollar index, which is PPI. And normally I don't look at it because I don't care. But for the sake of teaching and for completeness sake, I'll just tell you it was a little bit better, just a little bit better than expected. And usually when that happens, that's bullish for the dollar or bullish for the currency. And since the data was coming out on the dollar, it's salient for the perspective that it should be constructive or positive or bullish for the dollar index. Now, that's a short also right there on euro dollar. If you didn't hit the first run, that right there is a short. And if you looked at a 1 minute chart, that's actually a bearish optimal trade entry. I'll let you look at that on your own. Now, again, what you don't see, I'm watching actually a 1 minute chart too on euro and dollar. So at certain points during this, I'll kind of like ring in that commentary. And here's a 1 minute chart. Okay. And that's essentially what I'm referring to for the bearish optimal trade entry. So price really should start to sell off from here on the euro dollar, and it should start to rally higher on the dollar index and make its way towards its premium high on the CIBI for dollar, that premium high, just above 96.30. I'm sorry, 96.25. Okay, I'm not going to stay on a 1 minute chart. I just want to show you real quick, as I mentioned it, that the 1 minute chart I am observing. So you can see that we did in fact trade up into a small little fair value gap that's bearish in its optimal trade entry. And on a 5 minute chart, it's again trading in consequent encroachment, or not consequent encroachment, mean threshold of the bearish order block on the 5 minute chart. All right, we're seeing almost immediate rebalance on that 1 minute chart for euro. See how it ran right back up into that small little decline. All right, so euro should start being real heavy in here and attack those relative equal lows that's formed around the 130.06 level. And you know what's below that, the 113 big figure. There you go. That's what you want to see. You want to see that price just like that. That's confirmation. And you notice that the dollar index is now reaching for its premium high. We want to see it broken and then come back down to it and act as support. And that will give us the idea that we can trust for a run potentially up into that 96.50 level, and then ultimately continuing maybe towards that hourly premium high on the dealing range we've been outlining for almost a week and a half now. Okay, so you can see how we've come off the lows on that dollar index where I mentioned the fair value gap and the bullish order block, and that would be an optimal trade entry. So far, we're just hanging around that consequent encroachment level on dollar on its CIBI. And we're seeing confirmation lower on all the premium arrays that we would expect to see keep euro at bay, not wanting to go higher. And it's delivering. Okay, in other words, it's going lower. Every time a premium array gets hit on euro, on the 5 and 1 minute chart, it's delivering sell side. It's offering it going lower. Okay. So we just about hit the premium high on the imbalance on the dollar index. Haven't quite hit the discount low on the euro. Okay, premium high has been broken on dollar. So we really don't want to see a move back below consequent encroachment on the dollar. So now order flow is bullish on dollar index, so that should weigh heavily on euro and draw it down into that imbalance I gave you around that 112.90 level. It's around the consequent encroachment level of that fair value gap. I'll add that imbalance on the chart shortly. I just want to keep your focus on how euro is delivering price at the moment. Now, what I want to see is I want to see price break down below the discount low of that buy side imbalance, sell side efficiency on the euro dollar. And when it trades right back up into it, I would enter a short right there. And I'm going to just do a short just to show you that I'm doing it with this chart. This is the only chart I've been talking about. This is the only framework, the whole thing. So if it doesn't pan out, you're going to know, because I have to show you the history. There's no way for me to have another scenario where that order would make any other sense, right? So keep your eye now that we're broken below the discount low on euro. So for the purposes of you practicing tape reading and journaling, like what an entry would look like and how you would frame it, you can set it up like this, and then right when it delivers, and I'll tell you when it should be done. Once we expand below discount low, we're just below it marginally. But this is the beginning of how the setup forms, because now we have first stage distribution confirmed. So now what we're waiting for is another leg or stage of distribution. So second stage distribution, that's the moneymaker. That's the holy grail, the unicorn that I'm trying to teach you to look for. And notice it's in the framework of a 5-minute chart. So here's my imbalance again. That's your first target. Now, because it's an imbalance down there, that's what we're looking for right there. Now, don't rush. Don't chase that. Let it come back up. The algorithm's going to remember this level right here. Okay, so when it trades back up into that, we want to see preferably an immediate rebalance to that. And if it does, that's a short. You would take a screenshot. If it turns right back up into it and hits that level, that's a short. If it does it, I'll try to do it as it hits it. But the shaded area here, that little pink area, if it can trade down into that, you would use the premium high of that range because it's an imbalance. So it'll go down and use the premium high as a resistance level. And then that would probably set up another area to sell short from. So if you were like looking the pyramid, or if you missed this entry, that hopefully we'll get this run into this discount low and act as resistance. Now again, think about it. This is not classic support and resistance. It's not any other theory of trading. It's not supply and demand. It's not Gann. It's not Wyckoff. Nothing. It's exactly what the algorithm does. And if this delivers like I want it to, you'll have one more testimony that you can file away that this proves my concepts work. All right, just to prove it, I'm going to draw you an arrow. I'm thinking I want to go up to here first. Grab me another one and drag this down, and we'll be looking for that objective there too. But that's not enough. You know, that little imbalance there, that's just the first objective. The level below here, that is kind of like the best case scenario and really the target of what I'm framing for you today, which is the sell side liquidity. So if we can get this here. Okay, so right there, that's what I'm looking for. That's exactly what I'm looking for framework wise. Okay, now on the dollar index, okay, dollar index, we would be expecting the opposite. So what would the opposite look like for that? Well, let's get this window out of the way here. And here's some hindsight for you. I think it's going to go down to the premium high right there, drawn in here in real time. And it's going to bounce off of that, fill that little volume imbalance, and then run up into, we'll just use this imbalance right there. Right in here, that's the first target. And then obviously, if we get through that, which is what I'm hoping to get for this example, we'll take out that high up here, which would be the opposite of the low that I labeled for euro dollar. And that would be your market maker sell model for euro, which is the tradable market, and the confirmation analysis barometer, which would be the dollar index. Let me get these off real quick because it looks like we might get our immediate rebalance. All right, so there it is. It's been put on the chart before it happens, if I can get it. There we go. That's a short right there. That's a screenshot. Or in my case, I'm going to enter right there just to prove that this was all done. You can see the execution. You can see the little arrow there. Now, I'm not going to let this pan out because I don't want you to be inspired to the point where you're trading or executing during weeks I tell you not to do it. That's not following my mentorship, okay? I'm teaching by example, but I'm proving because, again, I get these little snide remarks, okay, that come to me in my email. And they may very well be students in here that have this second doubts or, second guessing me or whatever. But I'm not using multiple accounts. I'm not using multiple screens. I'm only picking out the ones that work. Okay, so this framework is now here, and it's going to be a failure or it's going to pan out. So I'm just going to let it mark a little bit of time in here, and then I'll close the trade because I don't want anyone looking at the numbers of the payout, holding it to full profit. I don't want any of that, okay? Because if I do that, it diminishes the objective of what I'm trying to show you here is this is how you practice, this is how you screen capture, this is how you annotate your chart, this is what you're looking for, this is how the framework looks, this is exactly how both of these markets, the dollar and the euro, it could very well easily be the pound, but euro has a real nice framework here. But I want you to think about how this logic is exactly what I teach in the core content and the commentaries, okay? When you see those things conceptually taught, and then I'm going into live data, this is not replay button, okay? This is actually me putting something into the marketplace live, drawing it out on the chart. And if people cannot do this and they're educators, and if it doesn't pan out, they don't know what they're doing. You should not believe them. If I can't do these things, you should not believe me. You should not have any faith in me. You should not have any faith in the concepts if I'm unable to do these things. But I'm willing to do these things because that's what a good mentor would do. Okay? I want you to feel confident, not only in yourself, but in the concepts. But you're not going to feel confident about yourself or the concepts until you do these things. And in the beginning, it feels daunting. It feels like you're lost. You're fumbling around. You don't know what you're doing. That's normal. That's all normal. But over time, exposing yourself to it, you will see these things. It will help you. Okay. In YouTube in 2022, I'm going to try to do an example like this, kind of like frame out where I think it's going to draw to. I'm not going to do these things on live sessions. I'm not going to do that. Okay. Because that's teaching mentorship. But just like I'm drawing your attention here to that 112.65 sell side liquidity pool, you will look for these things. If the example is I'm looking for lower prices, okay, they all know it's a sell side, liquidity pool, and they know it's likely to create some kind of bearish signal. But I'm going to teach you details with this example should it deliver. Okay, and I can go back and fill it in. But I want you to know the logic here. Okay, the logic is exactly what you see here. The framework, I've outlined it in minute detail. So if I am clueless, okay, if I don't know what I'm talking about, if there is no algorithm, this is going to fall on its face and I'm going to fail. This will run up to my stop, blow out the high, and I'm wrong. If it's right, I want you to watch this video, okay? Every time you feel like you can't learn this or it doesn't work or the concepts are just too complicated, this is not complicated, folks. It's exactly what I teach in the core content. It just feels cumbersome because you haven't been doing it long enough. That's all. That's all it is. It's just like when you were riding a bike for the first time. It's scary. You probably skinned your knees and fell off and hurt your arms. It's all those same things. It's a scary process when you first go through it. But see, you're paying me money with the expectation you're going to learn to be able to do this. And you keep measuring whether or not you're going to be able to do it every single day when that's not a realistic measurement. Okay? So you have to commit to time and trust me, folks. I'm not going to lie to you. I'm not going to make up something I can't do. I could literally do this in front of judges, juries, CFTC, FCT, whatever organizations you want to have. I will gladly perform in front of them. Now, I'll put this over here, maximize the chart, and I'll close it just so you know. And here is the hindsight. All right, so I could sit here and do the whole beat your chest stuff, Okay. I'm just going to make it real short and sweet. If this stuff was cherry picked, okay, if it was hindsight, if it was 15 different charts and layouts and 14 failed and one of them worked, then I wouldn't be able to have the logic that I outlined this morning, and you wouldn't see what you have here. This shaded area here, this looks like nothing on the 5-minute chart. Once it broke down and gave us an immediate rebalance back to the discount low of the buy side and sell side inefficiency here, that right there is your entry. That was my entry. That may not be an entry for everyone in here. If you're using the logic with the market maker sell model, everything on the upside, that's the buy side of the curve, smart money reversal. You do not need to be trading and entering up there. You don't need to be getting in on the institutional order flow entry drill for low risk sell. This is the first stage of distribution, redistribution here. Notice it doesn't trade back up to the discount low of that imbalance I outlined in the video this morning. But I did mention that we would trade down to it here on the dollar, which was the premium high of that imbalance here. And I said that would be the beginning of the run up into here first, and then ultimately for the buy side there. So we have a market maker sell model over here, attacking the sell side liquidity, which it does handsomely. And this is a market maker buy model with second stage reaccumulation, exactly as I outlined, drawing it on the chart before it happened live, okay? If this logic was flawed, okay, if it wasn't exactly as I teach it, it wouldn't hold up like this. If it was anything else, Elliott wave, supply, demand, Wyckoff, Gann, whatever, harmonic this and harmonic that, you can't find it. It's not in the Wyckoff schematic, okay? As much as these folks that want to try to hide the fact that they're using my logic. But it's great, I understand. I'm glad they're learning from me, but don't call it something else, okay? It's disrespectful. The things that I teach you here in this mentorship are real. I can do them, I can show you them, I can prove it to you. I don't mind standing in front of a judge. I don't mind standing in front of a jury, okay? I have no problem. I can do that. That's why I tell you this stuff. You think I'm being cynical and, cocky. I'm telling you, this is further evidence that I am absolutely not worried about what other people think about me, and they make up lies about me, okay? They say horrible things, and I've been receiving terrible things from trolls in emails, okay? I've had things said about me that are not true. They're trying to ruin my image with what little image I keep of myself online. I'm not a criminal. I'm not a vulgar, disgusting person that would ever harm anybody else, okay? I don't need any of you going to trolls and defending me. So you can put your pitchfork and torches away. I don't need that. I don't need to be defended against trolls. Your time should be spent learning what I teach you and learning to trust yourself. You don't need to see much more of this, do you? Like, how many examples of this do you need me to do to prove that this logic is real? It's not fake. It's not contrived. It's not after the fact. It's not 14 different, layouts that I could have used today, and 13 of them fail, and this one works, so therefore I'm going to use it. Remember, I told you I was going to put a trade on to prove to you the logic I was looking at and anticipating. Even though you have all this lipstick here that I've marked out on the chart. Okay? I did all that. Can I do all of that with 13 other charts? All explaining the logic? Probably. I don't know how I personally could, but I'm going to suggest to you that, okay, let's say that was the case. That's how do you cancel that argument? Well, I told you I was going to put a trade on, and I entered it right on that candle right there. Now, I'm going to put the executions on here. It should be on there, shouldn't it? I don't know why it's not doing it. Let's see. Let me change the time frame and then maybe it'll pop up. Sometimes it doesn't, and then if you guys know what it's doing, why it's not doing, here it is. Okay, there's the entry. And it was right on that candle. Let me zoom in because I want you to see it's not some random candle that, oh, it fits the narrative. Now let me just go and do it. Explain how I'm smart after the fact. That candle, the logic was it was going to trade back up into this discount low right there. Okay. Again, the price is 113.018 pipettes. I'm trying to look at this range here and figure out what that's all about, aren't you? Well, if you're looking at the market maker sell model, which is what this is with the logic I gave in the recording this morning, all of this is the buy side of the curve. The original consolidation down here where sell side's residing. So everything that was used to pump it up, okay, all that logic that's on the buy side of the curve has to match up over here for the sell side of the curve. That's where your first stage and second stage redistribution will occur. The logic was I wanted to see this imbalance give way. It did. And once this low gave way, I anticipated a run back into that as resistance, and we got an immediate rebalance. That was my short entry. Okay. Again, it was not to show you that you should be trading when I tell you not to be trading with your demo account. Don't. You paper trade on paper, like not with a demo. You tape read. You put annotations on your chart. You screen capture. That's how you're doing it. Okay. You're picking up experience, but you're not filling your head up with toxic logic. And that is, okay, he sold short here and he called it down here. So how much money would that have been made? And that's not what I'm trying to teach you. You have to respect the level of risk that's involved right now. But you get experience from it still. And what time frames did I tell you to work in? 5 minute and 1 minute. So let's go down into the 1 minute chart and see what this is here. Okay, there's that range, and we'll just keep scrolling over until we see it on the buy side of the curve. So that's a down close candle right there. That's what I'm highlighting. So that down close candle during the run up of the buy side of the curve. Okay, here's that original run. Goes up right in here, downside, down close candle until we get to smart money reversal. So this area here on a 1 minute chart, you extend that out in time on the sell side of the curve. And then we have all this in here. So when we drop back into a 5 minute chart, you'll see how we have worked in side of that order block from the 1 minute chart over here. Now you can see, look at the bodies respecting mean threshold, midpoint of that 1 minute candle. So you see what I've done there? I've taken the logic with the time frames I've told you, and I even talked about it on my community tab today as a reminder. You have to be operating in the 5 minute and 1 minute chart because we're in these small little ranges on the daily chart. We haven't really moved anywhere yet. So how do you practice? How do you train yourself to read the tape? What I'm showing you here. The trade, again, was not to show you, oh, I'm smart and look how much money I could have made. That's not the point, okay? I'm not trying to teach you to ignore what I'm teaching you to do, which is not trade in these environments. Respect the level of risk, but still get the experience from practicing and reading the tape and how to properly annotate and screen capture for study journal purposes. But for this logic to happen, for those that may have the idea or the opinion, like a troll, thinking that I have done this with other ideas in other markets or such, and this is the one that was cherry picked. Well, my question to you is why did I enter here, right there? Okay, and it's the same account, because if I was doing this in other things, how did I only pick this one to enter on? Here again, this was the payout on that little bit of a move. And I wasn't trying to make money. I'm trying to show you the logic behind it. And I don't want to entice you to trade when I'm telling you not to trade. Okay? Your demo account is parked. When we're in low probability conditions, you don't reach for your demo account. You read the tape. You screen capture it. You do study journal entries. It's boring. I know it's boring, but once you start getting better at it, you love it because it's engaging, it's fun, and it's rewarding when you start to learn more about yourself and how you see price. And the history over here, same thing, same account, and it's not being blown up and I'm not replacing it with something else. Here's that trade today. If you watch the recording, you'll see that's the order number, ID number, whatever, and all these numbers pop up when I enter the trade. So everything is here exactly as it would be. And there's no other trades. It's all here. It's the same account, okay? The idea of using this is I'm pantomiming how you, if you have considered doing, and I'm not enticing you to do this, I'm just suggesting that this is one way you could go about preparing yourself to do a funded trading account challenge. I'm not promising that you're going to make a success of doing that, okay? I was asked by students, can you show in mentorship how we can prepare and approach trying to pass a funded account challenge? So if that is your interest and you would like to know how that would be done from my perspective, to pass their demo account challenge, this is how I'm suggesting it. Okay, you're starting with a low account. I've already in my mind shown you that it can be done rather easily. The threshold that they want you to hit, it's easy. I'm not saying that trading is easy and you're going to be winning all the time, but control over yourself and using the concepts that I'm teaching you, that builds confidence and experience. I can't transpose that from me to you, okay? But there's a lot of folks out there that will say very wicked things, and it's been going on for now like 2 months, and accusing me of doing criminal things and vulgar, nasty things, and I'm not that type of person, and I'm not answering those things because they don't deserve a response from me. And frankly, it's beneath anyone with any couth to respond to ignorance, like some of the smutty things that's been said about me over the last 2 months. So the questions come up all the time, does this stuff really work? Because some students will have hardship in trying to learn this because they're in their own way, and they'll quit or they'll be led astray by someone that says, I have something that really works and that stuff doesn't work. And because they're struggling, it's easy for them to say, well, it doesn't work. And I have this. Here's proof that it goes right into the logic I teach. I mentioned if we trade down to this imbalance, the premium high, that should act as resistance. We see it here, and then trades lower. Where does it go to? Sell side liquidity. And I told you exactly this was the redistribution level for the market maker buy model. That would be the opposite of this sell model, right? Because if this is a sell model, this is a market maker buy model. If I don't know how to teach this to you, it would be evident in me not being able to do it, correct? If I can't show you the logic, map it out before it happens in the chart, I'm a fraud. The logic is flawed. It's all make-believe and it's fake, right? That would be the obvious conclusion, right? Everybody would have that. But when you see these things how many times do you need me to do this? How many examples of this over and over and over do you have to see me do before you have faith in there really is an algorithm? I really understand majority of the time when it's going to do certain things. I don't know all of the times it's going to do certain things, and I don't know when they're going to do a manual intervention because that could come out of nowhere. I know the climates and the environments where it's likely to occur, and it messes up, the market for a short time, but everything goes right back to normal over enough time. But if you're trying to hinge your success on the next trade that you're trying to trade with live funds, which I tell you not to do, I don't do anything in this mentorship with live account trading because of compliance reason. Why would you want me to endanger myself legally when this is enough? Because this is live data, folks. If I would have, at the beginning of this morning's recording, if I would have clicked on a live brokerage account, This same candlestick formation and the way it delivered would have happened in that platform and that broker just as well as you see it here in this paper trading account. If you need to see it done in a live account in this mentorship, you did not listen to the enrollment process, because I promised you it's only going to be done in demo for my protection and yours. And it's how you learn. You can't learn to do these things while real money's at risk. You can't do it, folks. You're going to be worrying about money, which is the reason why I didn't hold this trade. I don't want you thinking about the money when I told you already not to be trading your demo account during these weeks. You need to wait. Wait. When the market creates a displacement, then these higher time frame charts will loosen up. Right now, you have to be operating on a 5-minute, 1-minute chart. And if you can't do that, again, like I said on the community tab on my YouTube channel today, there's no shame in that. It's not weakness. It's just you're aligning yourself with your own unique model. And if this model on a 5-minute, 1-minute chart doesn't match you, there's nothing wrong with that. But I don't want you to totally discount it, because this is how you can practice. Because the same, what's this chart? If I take this and hide this 5 up here, okay, and I didn't tell you what this market was, and I just said, look at the data here. How would you use that if this was a daily chart? You would do the same things that I've already outlined with this 5-minute chart. You would just have to submit to a lot more time, because each candle will represent what? 24 hours. So everything that you're seeing here on a 5-minute chart, you get lots of examples every month. That's experience that you glean, that you waste if you don't go into these lower time frames. That's the reason why I teach these lower time frames, because it's a way for you to get lots of practice, which is what you need to get good at reading the tape. And then the next level is to learn how to forecast. And then you take that and you add money management. Then once you have that, then you can demo account trade. So there's stages in your development you have to go through. But some of you guys in here just simply are impatient, and I can't train someone like that. I can't teach people like that. I had 6 people just quit because they believe some Yahoo out there saying that I'm threatening their life and their children's lives, and I'm doing this and doing that. And the guy literally had police officers come to my house 2 Fridays ago and ask why I'm harassing him. I'm not harassing anybody. I'm the one that's getting phone calls. I'm the one that has emails and threats given to me. Okay? No evidence was produced that I'm doing any of those things, but I'm getting a lot of slander thrown around on the internet about me. And it's not worth my response, because all that's doing is drawing attention to a troll. If anybody wants to trade in the Robbins contest, go right on in there. Okay? The routine's easy. Get up on that leaderboard, call me out, and I will show up. But a few people in here said, you know what? I don't think you're the person I thought you were. And while, you're all welcome to have your own opinion about how I handle myself when I was on social media accounts like Twitter and YouTube, they were like playgrounds. I vented and just goofed around with people that I knew were unable to trade. They can't do what I'm showing you here. This is proof, folks. This is proof that the concepts work. But you can't lie and say these things don't work when I'm proving over and over again that they do. Okay. I can do this in front of a court, in front of a jury, in front of the CFTC, in front of the FTC, in front of the Department of Justice. I can do it, and I'm not afraid of that. I have a long history of proving the concepts work in this mentorship. You all are thousands and thousands and thousands strong in terms of witnesses to seeing this stuff called before it happens. I don't lose any sleep over nonsense that's being said about me. What I do worry about is all of you, because I pour myself into this. I pour my time, my energy, my emotions. I pour everything into this community. And I don't want to tell you anything that's going to prolong your success. But I'm not going to endanger myself in this mentorship by trading a live account, which is not something I can legally do. But if I can't do it with a demo account, and if it doesn't perform exactly how I'm outlining it and teaching it in a demo, what the hell difference does it make if I'm doing it with a live account or a demo? Because if it's not going to work on a demo, it sure as hell isn't going to work in a live account. But if I can show you things that repeat over and over again, and they are precise, and this is extremely precise, you can't argue with that. And this is exactly what I promised when every one of you enrolled. You would be taught how to read price. And I would be committed to continuously teaching you. That's what charter is. Okay? A lot of the 21 group, 2021, the last group coming in, some of them are now becoming charter members, and they're now discovering there's a lot of stuff in the forum and places where they can talk with other members. And somebody opened up a thread, today or last night, I can't remember exactly when it was, but they're like, wow, I'm inundated with all this stuff. I don't know where to go. Where's the charter videos? So that way you understand, because you're getting ready to go into charter membership. Most of you are now paying for month 11 and or 12, and soon to be paying your last payment of charter. And then you'll ever have to pay me a penny ever again. And I can't wait because I'm so sick of it. Your attendance in here, like this video here, the fact that you're not paying for it as a charter member, that's charter. Charter is lifelong membership where as long as I have my mental faculties and as long as the markets are trading and I have health in me to be able to do this, and I ain't 50 years old yet, okay? I'm not that old. But my intentions are to be able to talk to you like I'm talking to you now. I want to be able to share, teach, and just because we're getting close to the curriculum, okay, as I would call it, doesn't mean that the learning stops. That's when the learning really begins, because now you have to figure out what it is that you want to approach for your own model. And as a charter member, you'll see that there's 12 models, price action models. They're just suggestions to help you frame an idea on where to begin. They may inspire you. And I've said this before, and I want to, drive you nuts with a longer video with all this banter. But no one's going to be able to stand and say none of this is real. It's fake. It doesn't hold up. Because it can. It does. And I can. I can perform with it. I can outline it before it happens. And if you give yourself enough time, I promise you, this will work just like I'm showing it in here. Now, I don't ever promise you profitability because I'm not legally allowed to do that. And nobody in their right mind would do that, because that would open me up to, promising you money. And I don't ever do that. That's why when you signed up, the enrollment agreement says that you can't make money with a demo account, and everything is taught as a demo. That's why I do it. It's to protect me. That's why I can talk to you the way I talk to you in here, because I feel comfortable being completely open with you about the limitations of what you're going to be able to do with this information. But I'm also a realist. I know some of you are going to get really good at this in a demo, and you're going to be at that crux where, hey, what happens if I put it with a live account? That's a discovery and an endeavor for your own experience. Like I said, if you make money, I don't want you high-fiving me. You did that all by yourself. And if you lose money, same thing. You can't co-sign me on that. You put yourself in that trade. So it's a matter of discovering yourself in an independent basis. So the responsibility is entirely yours. But nobody can say that this stuff is fake, okay? It's not broken. It's not made up. It's not contrived. And I can prove it every single week. I'm confident because I know I've seen decades of it. And I would have no problem, absolutely no problem whatsoever standing in front of whomever, proving that this is exactly what I promised to teach, and this is exactly what happens in these marketplaces. It doesn't matter if everybody outside of this group doesn't believe in me or they think that you are wasting your time here. These people are lost. They're looking at things that have no bearing on why these markets are moving. Look at this, folks. I mean, really, take a step back for a moment and think. Have you ever seen anybody be able to narrate what the market's going to do before it happens like this? This precise? These specific levels, the logic as to why it should happen, and then boom, you have it. That is sound logic. That's the real market. The things that occur at these locations, I told you I can't teach you what's really going on behind the scenes that cause the algorithm to do that. I'm limited. I can't tell you those things. No matter who I stand in front of, I'm not talking about that. So I created a language which allows me to talk with a chart where there's an overlap of what the algorithm does and what the charts sometimes, not every time, sometimes communicate that same phenomenon is likely occurring at that moment. That's what the market maker sell model and the buy model is. That's what breakers are. That's what institutional order flow entry drills are. There's a thing, there's an event that's occurring behind the scenes that's not in the chart. They're not making their decision, okay, based on charts. They're doing something else that you can't learn from me because I'm never going to tell you. But you don't need to know what that thing is. Do you need to know how that engine works underneath the hood of your car? No. You just know when you push the button, or if you have the car that has the key still that starts the ignition, you know that that's the outcome. Usually, if your battery's good and you have gas, if I do that, the transaction usually results in the engine starts up. Do you need to know all of the things that go on inside the engine for that engine to start up? No. And for some of you, and for many people that have left over the years I've been doing this mentorship, because I would not divulge that when I promised them in the beginning that I would never do it anyway, it's something that is a deal breaker for them. Well, I thought you would just, really once we got in here, you would teach us all that. And you're an asshole because you didn't. Well, you didn't pay attention because I did not promise that. I promised that I would absolutely prove that these markets are controlled, rigged, and they're algorithmic. I promised that I would teach it to you, that I would show it to you, and that I could perform with it before it actually happens in the chart. And I have years of it in here as testimony. And I have so many people in here that are witnesses to it. I am not worried about trolls' opinions of me. Okay? From a man perspective, a human being, a teacher, I pour a lot of my heart and soul into this. And if I wasn't like that, this would be a monthly payment that would come to me in perpetuity. That means you would constantly have to pay me. I don't want that. It's a burden for anyone to have to pay it, number one. Two, it frees your mind up once you are chartered. You don't have to worry about payments. Okay, what are we going to learn today? What are we going to learn this week? What's going to happen in the marketplace? How's he going to navigate this? Where's he going to take us? What's the direction we're going? You're not worried about money no more. That's one of the benefits of being a charter. But when I have students leave and quit, especially at month 11 and 12, and say there's no proof that this stuff works, that's a lie. That's a lie. But I understand. They're looking for something else that's going to be easy for them when they didn't stay long enough to see how this can become very easy. It's a learning process. And when you strip it down, which is what I'm going to do on YouTube in 2022, I'm literally going to take optimal trade entry and strip it down to its chrome. That's it. No No bells and whistles, no extra this and that. It's going to be simply New York session, optimal trade entries, and the days they should form. It's not an everyday setup. It's not an everyday model. It's the every week I'm finding that, and I'm going to get it. That's what I'm going to do. And I get a lot of emails and a lot of excitement about what I'm going to be doing in 2022. I'm not teaching mentorship like you see here. I'm not going to be outlining all this stuff. I'm not doing that. You paid for this. This is my community. This is where I can talk openly, okay? On YouTube, I am helping people that could not be here because I want to. And how dare any of you send me emails criticizing why I should take any of my personal time and share it with people that have faith in me, look up to me as a teacher, and show their regard for me. Just because they didn't pay me, I shouldn't do that. It's not going to be the same level that you get here, but it's going to be helpful. Folks, it's going to get hard. And I don't want that on my conscience. Remember, I promised I would teach the rest of my life. If I was given the ability to do this, I promised that I would spend my life teaching. But I needed a community where I can vent and get it out and talk openly. My kids don't want to learn this. They all work jobs. I make them work jobs. They're not sitting around me helping me run mentorship. That's not what's going on. They're working jobs and they are doing menial jobs because I'm trying to instill in them hardship. So that way they say, well, you know what? I don't want to do this anymore. Dad's not breaking off any cash, so I better learn how to do it. One of my oldest sons are here tonight and they're visiting and they're waiting for me to finish this video so I can sit down and hopefully teach him. So pray for him because I've been wanting this for a long time. Crypto, my oldest boy, Cody, he's doing decent. He's got about 10 grand in profits, with the coins he has. But he's not trading. He's just getting and holding them. That's great. Now the bug bit him. And I'm hoping that, whatever happens, he'll want to come back and learn more. But I didn't tell him to get into those coins. He did it on his own. And he's seen real money in his account. And he's not even using anything I'm teaching. So think about that. So it's interesting and exciting in a lot of ways, but he's not interested in learning how to trade. So it's just one of those things where it drives me nuts. My daughter doesn't want to learn how to trade. She's completely against it. She doesn't want to do it. And my younger boys, who still live at home with me, they're just not interested. They're in the video games. They're typical kids. But here, I know I have an audience in you. And you're fascinated with all the little intricate details about why the algorithm does this and that. And while some of you may think it's boring, like this video here, oh, you're talking too much about yourself. No, I'm being myself. I would love to have this interaction with a mentor because I'm not hiding anything from you. I'm not putting on a facade. I'm not trying to be funny as a comedian. I'm not trying to be a performer and be egotistical. This is really me. Like I'm talking to you like you and I are close friends and we've known each other for years, because some of you have. You've known me for years. This is the real me. This is how I am in my personal life. This is how I am with my family. I'm not a braggadocious person. I'm not trying to be arrogant. I do it to, in the past, to thumb my nose at people I know are fake. But, at some point, trolling and, getting into people's personal lives like they have been doing with me, it's not, number one, it's not healthy. It's intrusive. And for the most part, it's not worth me responding. It's beneath me to respond to some of the nasty, horrible things that people are saying about me. Okay, they're accusing me of being a racist. They're accusing me of, wanting to harm someone's family and threatening someone over a trading contest. Man, get your ass in the Robbins contest. Okay, I'm not threatening anybody. I'm the one that's getting phone calls. I'm the one that's getting emails. I'm the one that's getting text messages, and I have every single one of those. Every single one of them. I went and filed criminal charges for harassment at the local authorities here because 2 Fridays ago, or maybe 3 Fridays ago, maybe two or 3 Fridays ago, local police came to my house and asked why I'm harassing another guy half a country away. I'm not harassing anybody. I'm not doing anything. I'm minding my own business. I'm doing my own thing. But I'm not following anybody else and recording them and their family members and stalking them. That's what's been going on for the last month and a half with me. I'm the one that's being harassed. I'm the one that's receiving death threats. I'm the one that has had my family threatened. And all that stuff that's being said about me is intended to get other people to want to do the same thing. So that way I'm further harassed. Let me tell you something. I'm not worried about any of that stuff. You know, if people want to follow me around, they're going to see I live a really boring life. I told you I'm simple. I don't try to do things extravagant. And a lot of you want to meet me. And I told all of you that would ever say those things, you would be underwhelmed. Heroes, many times, if you try to reach out and meet them, it's like, wow, I kind of was expecting a whole lot more. That's what would happen if you met me in person. You're not going to see some super high, affluent guy bouncing around wearing stuff that's ridiculous. That's not me. When I came out on Baby Pips, that was the same way I did it there. I'm the average guy with an extraordinary gift, and I love sharing it. But when I have students that have spent a year with me and they listen to lies that are being spewed about me with no evidence, none, and they say, well, I don't think you're the person I thought you were, and I don't want to be in your mentorship anymore. And they quit. That has happened with 6 students in the last 2 weeks. And for me as a person, it bothers me. It makes me feel like, what did they do with themselves while they're here? Like, what were they watching? Because I've literally have been doing what nobody else has been doing. I'm calling it, teaching it, and telling you when not to do something in the most difficult time in the past 2 years. I mean, the past 2 years, the whole world's upside down. And I am so blessed to be able to see the things that I understand and teach you still hold up. That is astonishing, folks, because if you remember, in 2020, I was very vocal and said, I'm not trading. I'm not touching the markets. I'm not doing anything with them. I don't know if my concepts are going to hold up. And I was open and transparent with all of you. And for the most part, they still worked. There were some times when we could see that it wasn't like not likely to be productive or precise. But when it was supposed to move, it did. And I was encouraged by that. And you should be encouraged by that. There's times where I tell you, hey, I don't really know what's going to happen right now, so we have to wait. And I give you certain things I'm looking for that would help me understand, or what I believe at the time when I'm doing the analysis and commentary with you, what would likely give me more insight if it does this or does that, and why that would be important. That to me is what a book can't do. Okay, that is what anyone that gets my videos leaked can't really appreciate. And that's why they say these are boring videos, because most of the video work I'm doing is at that very moment. Think about that. That's why I do what I do. I'm calling the market. I'm framing the market. So yeah, people can look at what I'm doing and they try to figure out, because they watched 4 or 5 videos and they're old. But those videos outline what was going to happen before the fact at that moment, in that time, that week, that day. And If people share those videos and, oh, we're going to take him down, we're going to put his videos out, you know what you're going to do? You're going to confirm everything I've always said, that I can call these markets before the fact. And all that's going to do is build my YouTube community even larger. And that's what's going on right now. I almost have 200,000 subscribers, and I'm so humbled by that. I don't advertise myself anywhere. It's all word of mouth, folks. And you are here. You're here right now. You are all like the turtles with Richard Dennis. I think that's his name. The turtle traders. Now, obviously, there was a smaller group with him, but you are people that are in here. And I swear to you, this is not egotistical stuff at all. They're going to write books about the things that I've exposed in these marketplaces. And you're here. You're here with me right now. And I'm turning 50 next year with no promise of, 100 years old. Nobody knows what's going to happen. But if something happens to me, you have a unique experience. And while I don't think I'm all that special, I believe the gift that has been given to me is special. And I'm transferring that to you. And you are able to do that with your children and your family members. And that to me gives me a great deal of joy. That motivates me. That gives me the energy. And there's a number of you have been reaching out saying, hey, look, I just passed my funded account challenge. I'm funded now. I've done this. I'm doing well. I'm not making millions of dollars, but I'm making my bills now. Thank you. Like, that's amazing. That's amazing. Because it proves that what you're learning is transferable. It's not something I can only do. I'm not up here as David Copperfield and I can only do the magic trick, and you witness it and you enjoy it from that perspective, but you can't really do the trick yourself. So here, I'm showing you what it looks like in the market. I'm teaching the logic as to why I'm expecting it. Why should it be doing these things? When should it do it? And if it was flawed logic, it would fall on its face and I would be exposed as a liar, as a fraud, that someone's talking about something that isn't real, it's a scam. And guess what, folks? Here's one more testimony. It's not a scam. It's not a fraud. I'm not defrauding anybody. You all paid to be here to learn how to read price action through a demo account. That's exactly what the agreement says when you signed up. And I'm delivering it like gangbusters every single month. And I could sit down every single day and do what I just did today. Every single day. That's not bragging. That's confidence, because I understand what I'm doing. You should want that in your educator. You should want that in your mentor. Because I'm telling you something right now. If 1/10 of the yahoos that's on social media, if one other person could do what you see me do, if they knew exactly what I'm teaching you and understood it like I understood it, you would see the biggest megalomaniac, egotistical prick you've ever seen in your life, because they would be flaunting it everywhere. And I want you to think about that, because I could literally mop the floor with every trading contest out there, every single one of them. But because I can, doesn't mean I will or should have to. That doesn't taste good, does it? But it's the truth. I got a running track record of years with all of you. And I'm convinced that this stuff will work in the future, as long as the markets are freely traded. And I say that with my tongue in cheek. when they're all manipulated, they will continue to do these things because they're controlled. These central banks are not leaving it up to chance. They're not letting Reddit traders take them down. They're not going to crash the central bank's currency. They're not going to do it, folks. And if you believe that George Soros was the one that took down the British pound single-handedly, no, he didn't. He was just the face that took the rap for it. It's all controlled demolition. You're not going to beat them. You're not going to change it. It's not going to stop working. You just need to get yourself in alignment with a few times a week where it gives the opportunity for you. Don't make a big fuss about it. Don't draw a lot of attention to yourself. Just execute and go about your business. Gray man, that's what you're supposed to do. Draw no attention to yourself. There's no reason for you going out there trying to be the superstar, because all you're going to do is draw the most unwanted attention that you'd ever imagine. The escapades that I plan on doing on YouTube next year is going to be for a few months only. I'm not going to be doing a whole lot because I want the second half of next year to be at a very slower pace. I'm going to wind down to eventually one video a week here, but do a lot of forum discussions and things and exercises and stuff through the forum. It's easier for me to produce those types of things. In fact, I could be, mobile and share that and not have to produce videos and produce multiple videos because of user groups. I have a life, folks, and I want to get back to it, but I still want to engage all of you. And there's lots of things that I can teach and promote inside of, all the exercises I have available and things that draw your attention and practice. And I don't need to do videos to do that. And video work is extremely time consuming. It's a lot of editing. It's a lot of double producing. It's a lot of work. And it creates a whole lot of expense because of servers. And I'm going to say this and close the video because I've been jawboning a long time. The downloading of the videos, I've obviously been asking you to do it because I think that we're going to have problems with the internet soon. I hope I'm wrong, but if we do have problems with the internet, you're not going to have access to the videos you paid for. So if we do have problems with the internet, but you can watch them remotely on your computer, hey, you're accessing the content that you paid to have streaming access to. But I don't want you panicking. Like, there is no oh, you better have it done by this time. I'm suggesting that you start doing it, because if that interruption occurs, you're pretty much SOL. Sorry, out of luck. There's another expression, but I'm not going to use that one here. But you want to start building your collection of the videos and have them. So that way you can give them to your children. That way they have access to them. And you can just keep passing it down the line. But there shouldn't be any urgency like you're panicking. I got a lot of folks emailing, I'm afraid I'm not going to be able to get it all done. And how can I do this quicker? Just do 1 month, okay? Download each month's videos. Try to do one of them each month or two months per month of time. So over the next calendar month of, say, January 2022, try to download 2 core content months and the commentaries. But every single time you watch a commentary that's recent, you should be downloading that as soon as I make it. Like, before you even watch it, download it to your hard drive, save it under the month, like create a folder in your computer that says, like right now, this is December the 14th of 2021. You should have a folder of 2021. And inside that folder, you should have a January through December folder individually. And then you put this video inside of the December folder. That way everything is nicely neat. It's all categorized. And there you have it. So between that and the forum, which gives you like a very brief description of what's being covered in the video. And obviously, like I mentioned the other day, I'm not going to be making a long-winded summary of what's in the video, because like this video here, I've talked about a lot of things and probably bored the socks off of most of you. But this is what you get. You get a lot of teachings and you get the learning, but then you get the real me too. Okay, so don't fault me for that, and I don't care about your opinion if it doesn't suit you. Okay, because I'm not going to change who I am because a few people in here don't like when I talk like this. I got all the teaching out of the way in the beginning of the video, so now we're here at that point where it's housekeeping stuff and what's on my mind, and if I have any chips on my shoulder, this is where I usually vent it. But hopefully you can see that this is logic that repeats. Okay. And I'm not trying to teach you to trade when you shouldn't. I'm not trying to entice you to look for profits when I don't want you looking for that right now. I'm teaching you to read price action and appreciate the fact that these things repeat with the expectation that it should deliver on what time frame? The 5 and 1 minute chart. Everybody else is looking for bigger moves. They're looking for the daily charts to be rocketing. They're looking for 4-hour setups and they're wondering why they're not getting paid. They're getting stopped out or it's not moving like they want it to. And here we are, the demo ballers. Those crazy ICT people that only want to look at demo accounts. And we're dealing with Swiss timepiece precision. That's why I say all the time, smile and wave. Let them talk. Let them say all the nonsense in the world. Let them talk. Everything they're saying is fake. It's a lie. You see it happening here. And if you can't make it work, and you don't want to be here, I don't want you here. Don't waste your time here. But don't lie and say this stuff doesn't work, because that's BS. Because it works. And it works every week, every day, and it won't stop. Hopefully you found this one insightful, and I will talk to you tomorrow. Oh, let me real quick. I forgot. I mentioned that I was going to do rejection blocks. Yeah, rejection blocks on tomorrow's video. So we'll be reviewing the PD array of the rejection block. I'll give you some more details about when to use it, what to use it for, and, little subtle nuances. I got a lot of feedback from the one for institutional order flow entry drill. A lot of people that were struggling with that one, it helped a lot with them. So that was kind of like what I promised. We would go back through each individual PD array and give you the finer points that this is what you should be using them for, why you should use it, and what it should look like, and the little subtle nuances and criteria with them. It's not a big long-winded volume of things that need to be learned about them. It's just the very punctual, like right to the point. This is what it is. This is what you're looking for. Okay. The reason why I can teach that now, and you're probably saying, well, you should have done that in the beginning. It wouldn't have been received because you have to have all of the other things behind you. A full calendar year, when the markets move, when they don't. Like right now, we're in a consolidation that is lasting weeks. So if you don't have a teacher that has experience in knowing when to anticipate that, when to know it's going to form, which you're witnessing, folks, you're witnessing it. That's proof. Do I need to call everything proof in here? This is proof. This is proof. It's absurd, right? Just keep doing what you're asked to do here. Study how I tell you to study. If you submit to that in time, how much, I don't know, because all of you are resisting in your own ways. You're doing things that you shouldn't be doing, and you're prolonging your own success. If you just do the things I tell you to do in the lessons and or the commentaries when you're learning and watching them, those are the ways that you get this understanding. This is absolutely repeatable in your own hands. If I didn't believe that, I would be honest and tell you. I would tell you. But this stuff repeats exactly how I teach it. You just don't know yet when to anticipate it, what it looks like. That's over time. You'll get it because you're exposing yourself to it. I promise you, it will happen for you. But you can't rush it. You can't force it. You can't make it happen. And there is absolutely zero shortcuts to it. None. No automated software program. No EA. No black box little gimmick thing that's going to do all this stuff for you. This style of trading is fully discretionary. It's manual for a reason. This is why I have never fully automated all of it. There's certain things that can be automated. The majority of it can't be because you have to revert back to narratives that are hard to define in coding. Now, I know some of you are in here that are programmers and you say, well, that's not true because I didn't say there isn't some aspects to the things I'm teaching that you can do it with. But the whole thing can't be done. Because what you're saying is you're going to now recode the interbank algorithm. And that's just simply not going to happen. So hopefully this has put things in perspective a little bit more. Hopefully it's a reminder to all of you that you are in good hands. And I am honored that you chose me to be your instructor and your teacher. And I am inspired by your feedback. I'm inspired by you saying that you're learning. I'm thankful when you give me those. And I'm thankful that you appreciate if I just send you a little smiley face or a real short little snippet. Like, I can't write, obviously, emails like some of you want to write me because I don't have the time to get through it all. I can't do it. It's too many of you. But I see the feedback. They push them to me. And sometimes I'll reply, with short little things. But I'm not in a position where I can do that a lot. But when they come, I'm encouraged by it. The last few weeks, it's been very helpful because the public perception of me is 50-50. I'm a jerk or I'm the nicest guy on the planet that wants to teach everybody. And here, it's what you see is what you get. I'm consistent. I'm teaching you exactly as I promised. I'm teaching you right from the lesson core content, and I'm putting it to task. I'm showing you in the chart. You want me to do it with live funds in front of you, so that way you can copy me and make money. And that's not going to happen. It's not going to happen. And that was never promised to you. But you can learn to do this how I'm teaching it. And I'm not cherry picking anything. This is one more proof of that. There's no other account. There's no other narrative that would have justified why I put that on right there and called it down here. And remember, the logic was you should not be trading right now. So, what are you going to do with this? Does it inspire you to dig deeper? Or you're just not convinced it didn't do anything but waste more time listening to a long video about much of nothing? There's the two camps. That's going to be the listener of a video and watcher and viewer of a video like this. But I wish I had this like you have. I wish I did, because in my wildest daydreams, I wished that Larry Williams offered something like this, and I would have spent every dime I ever had to be a part of it, because I believed about him like some of you believe about me. And you hold me in high regard, and I appreciate that. So I like to cultivate that trust that you've placed in me with sincerity, like videos like this. That way, I care. You see in the level of teaching, like you don't even pay for this. You get 2 videos a week from me and 8 lessons. And here I am, I'm pumping them out every day, with the exception of holidays, obviously. Oh, it just prompted me to remember something, didn't it? Let's take a look at this real quick. I mentioned the other day, and someone brought up in the forum, they weren't really sure about what I was saying. Here's Christmas, okay? Now, I'm going to be doing videos on the 15th, the 16th, and the 17th. Obviously, the weekend, 18th and 19th, I'm not. I'm going to do a video on the 20th, commentary. I'll do a commentary on the 21st. Wednesday will be just a lesson. I'm not going to comment on the markets because this is Christmas volume. I'm not worrying about it, and you shouldn't be worrying about it either. I will not be doing a video on the 23rd or the 24th. No, I will not be doing a video on Christmas. Will not be doing a video on the 26th. I will not be doing a video on the 27th. I will not be doing a video on the 28th. I will be doing a video that is a lesson only, not commentary, on the 29th. I will not be doing a video on the 30th. I will not be doing a video on the 31st. Saturday, I will not be doing one, obviously. The 2nd, I will not be doing. And I'll return back to doing commentaries on the 3rd of January, on that Monday. Okay? So that way, very plain, very simple. You know what to expect. And I've already over-delivered for the month. So none of you should be upset about the fact that I'm doing this, because frankly, over the years, I've done more work on these weeks during the mentorship delivery, and I regretted it every time. And I'm not going to do it no more. So since no one's new coming in after this, I'm going back to my old schedule. I'll give you something that's pre-recorded for these days here, so that way I can enjoy my holiday with my family, and I encourage you to do the same thing. Okay, I promise the video is now ending because I've been going for another hour. I'll touch base with you tomorrow, and we'll talk about the rejection block and commentary around the markets. Until then, be safe.